Hello grade 9s, I'm on page 48 and I'm going to look at important debtors terms. Okay, so what is a debtor? A debtor is somebody that owes you money after you sold to them on credit. Okay, so they only have to pay you later. And the debtor is an asset to you because they have to pay you the money still. You're going to get the money from this person in the future. Now the invoice is the source document or the slip that you will write out to this debtor when you sell to them. Okay, so when you sell to someone, and they're only going to pay you later, we're going to write those transactions in the debtors journal. Okay, and the debtors journal looks like this, where you put all the details of the debtors, and then the sales value that you sold for, and the cost of sales value, which is the cost price that you as a business originally paid for it before you sold it at the selling price. Difference between the two will be the profit. Now, if this debtor brings back the goods because they're not happy with it, or maybe you overcharged on the invoice and you want to rectify this, you write this in the debtors allowances journal. Now the debtors allowances journal also has two columns like the debtors journal, but this journals or this columns are called debtors allowances and the other column is called cost of sales. Alright, the only difference between the two is that the debtors journal shows sales there and this one shows debtors allowances. Everything further is the same. The other difference here is you are giving discount to the debtor, so the debtor's amount will decrease. With the debtor's journal, the guy or the debtors will owe you more money, and with the debtor's allowances journal, they will owe you less money if you record the whole transaction over here. Okay, now the debtor's ledger is the next one that we're going to look at. That is where you show the individual accounts of, let's say, Mr. Jones or Mr. Barry or Mr. Van Wyk or whatever. We're going to show those individual accounts in a specific ledger called the debtors ledger. Alright, then we've got the debtors list. The debtors list will be for every single debtor that you did a debtors ledger account for. Let's say this was Mr. Jones. The final total that is left will then be put in a debtors list. Okay, so let's say this was Mr. Lionman, like in the example below, and then the final total would have been the 8,750. Then there will be another account in the debtors ledger for Mr. CMU, and another account with that total at the end, and another account for Mrs. Oliphant. And that will be your debtors list, where you just put the final total down. Okay. Now the debtors control account will be a summary of all the different journals. So I'm going to take the final total of the debtors journal, and I'm going to take the final total of the debtors allowances journal, and maybe it was paid as well. So all those details or totals, final totals, will be put in the debtors control account, which is in the general ledger. Okay, and then current assets will be a debtor will be a current asset because account is generally repayable to the debtor within 3 to 6 months. So that's less than a year. So you're going to receive the money from the debtor in a shorter period of time. Okay, so that's important terms on page 48.